You're listening to Kitchen Table Finance. Join Dave Shotwell and Nick Nauta as they cut through the complexity of financial planning and serve bites of investment advice that are both personal and practical.
Hey Dave, how you doing today?
I'm doing excellent. Nick, how are you?
I can't complain for a Friday. It's a
Excellent.
beautiful day out there, and we got a special guest today, so I'm excited about that. We've got Ben Rathbun from the Rathbun Agency. I don't even know how to introduce Ben because he does so many cool, awesome things, but I guess being president, CEO of the Rathbun Agency is kind of where we're at right now. So we'll leave it at that for today. But super excited to have Ben on. We have a great topic today about insurance rates going up and how to think about insurance. So super excited about that today, Dave.
Yeah, hot topic lately.
So with that being said, Ben, welcome to the show.
Thank you for having me.
I think that like our big burning question of kind of why we wanted to have on, and full disclosure, it's because you've sent me like 3 or 4 emails with links to blogs about like why my insurance rates are going up, which I appreciate. I guess let's start with that. Why are insurance rates going up, and kind of walk us through the market and what's happening out there.
Yeah, absolutely. Well, thanks for having me, Nick. I guess maybe I'll just introduce myself a little bit
Sure.
further than that. I'm Ben Rathbun. Like Nick said, I own Rathbun Insurance. We've been around for 68 years. So we're an independent agency right here in Lansing. My grandpa's 2 brothers started in 1956. My father was here for 39 years until he passed away about 3 years ago. So I took over as CEO of the agency in 2021. We write personal insurance, commercial insurance, heavier on the personal side. And I think in this discussion, we're going to stick to kind of home insurance.
Yes.
But in general, it's a wild insurance marketplace right now. And we consider, I would say, ourselves very much an education company that happens to sell insurance. Very similar to probably you consider yourself an education company.
Sounds familiar.
Absolutely.
Absolutely.
About their finances. But everyone, you have to buy insurance. You have a mortgage, you're required to buy insurance. You have a car loan, you're required to buy insurance. And so for me, that makes it a little easier because you have to buy my product, but also you can buy it from anyone. There's so many people who sell it. And so
Right.
who do people buy insurance from? People they like and people who educate them and that they can have a conversation with about their risk.
Absolutely.
We always, insurance is one piece of the risk management puzzle. And, it's the last resort that you have to use your insurance, but it's not my job just to sell you a policy. It's to, here's what your exposure is. Here's how you can protect yourself, whether that's through insurance or not. Often we have recommendations for people that they can do from a risk management standpoint that have nothing to do with buying a physical policy, or, just home maintenance tips or things you can do to make yourself more attractive to a home insurance carrier that has nothing to do with the actual rate itself. I think in today's market, we're an independent agency, so I sell for several different carriers, and the rules are changing every day. They're changing every day.
Mm-hmm.
And I think people don't know what to expect. I have a carrier who is one of my top carriers we've been selling for 30 years that has minimum deductibles. Now we have $2,500 minimum deductible on every home. Wind hail deductibles, 1% of your dwelling coverage. I guess I'll explain what that means. If you have a $500,000 home, your wind hail deductible is now $5,000 or 1% of that. This carrier that's just a rule. You can't get out of it. So when the average person had $1,000 home deductible and now their renewal is renewing at $2,500 with a 1% wind hail deductible, they just did that to 3,000 of my customers.
Yeah.
That's a really big shift in how you deal with your insurance. And the general first reaction is, well, just move me to another company that has $1,000 deductible.
Mm-hmm.
Well, I can do that. But also, let's think about what we're actually trying to do there. I think home insurance in general, we have used as maintenance policies that cover little things. They'll cover you if your home burns to the ground. But I see people turn in claims all the time I had a water backup claim that was $1,800 and you have $1,000 deductible. Yes, you have coverage for that, but that's not a you want to turn into your policy.
Right.
To say, oh, insurance is a scam, I understand that thinking, but if the insurance company is going to charge you more money for 3 to 5 years and they only paid out $800, it's not in your best interest to turn a claim in. And oftentimes, just because you can do something doesn't mean that it's going to be advantageous for you in the long
Exactly.
run. We've had, Dave was just saying, people who have like 2 small water backup claims, and you don't think anything of, oh, I'll just turn them in, I have insurance. Well, now you can't find insurance, or your insurance is now
Right.
$1,000 more a year. And so we just find that in today's market, we're significantly more consultative than we are price. Everyone's renewal is going up. I actually called someone yesterday because their auto and home renewal went down, and I was like, I haven't had one of these in a few days. This 8-year-old couple, like, your rates are going down. They're like, you make calls on personal auto premium swapping? You, George, I'm telling you, I don't get to do this anymore.
Right.
But being consultative makes people be able to make more educated decisions. And if you're not going to turn in a small claim so that you have insurance at a more affordable rate, I think if we look at even on a national perspective, I mean, I deal with carriers that write all over the country, and we with super regionals with national carriers. And if you look at the marketplace, like Iowa had 2 of their top 3 personal lines carriers pulled out of the state of Iowa last year.
Wow.
So that's hundreds of thousands of personal lines policies that are being non-renewed. In Florida now, over a third of homeowners policies are written through their state plan.
Yeah, I've heard Florida's just
Citizen,
a mess.
Nothing to do with the citizens here in Michigan. It's their FAIR plan, but they're actually now requiring, I just heard last week, if you have over a $500,000 home, they're requiring that you buy a flood policy. They're sick of arguing with the state-run insurance company on what's water backup and what's flood, and so they will not sell you a policy unless you have a flood policy.
Wow.
That's just not something that I've ever heard of before. So we're just seeing new rules all the time when, 5 years ago, and you came to me, I could shop you out with 10 different companies and every company would take you. Now only 4 of them will.
Yeah.
And so you just have to make yourself a more attractive risk. And I think that it's easier to turn a claim in on your home policy than to maintain your roof on your own. That's just easier. But part of being a homeowner is maintaining your home, because an insurance covers the unexpected. And so, if your refrigerator is leaking for 2 months, I'm not going to buy you a new refrigerator. You should have done that on your own. But I think our industry has, for a long time, trained people incorrectly. I'll use roofs as an example. This may be an unpopular opinion, but I think it's just ridiculous that we pay replacement cost roofs on the vast majority of policies. Because if my roof is 25 years old, you're going to buy me a new roof at the same amount. If I didn't have wind or hail, I would have to just buy a new roof, and they would cost me $20,000. And so there's carriers who are putting schedules on, after 10 years or 15 years, we're going to put you on a depreciation schedule. There's other carriers that we're going to go to a 1% wind hail. Those are all ways that you can react to not making money as an insurance company. And those don't necessarily just have to do with price. They have to do with your risk tolerance. And so some people are totally fine with having a $2,500 deductible and a $5,000 wind hail deductible. And other people are willing to spend $200 more a year to have a $1,000 deductible because they don't have $2,500 sitting around.
Yes.
And so it's the benefit of being an independent agent, I think, is I have carriers and options, because I can wear my risk management hat all day and say, don't turn in, that's $2,500. And it would be very close-minded of me to think that everyone has $2,500 sitting in their bank account to pay a home deductible, because that's just actually not reality.
Right.
So,
the statistics on that are horrible.
And from a carrier standpoint, like, that's great that they made that decision, but oftentimes the carrier does not understand the ramifications of how that is going to impact policyholders on a an individual basis. And so that's our job, is to kind of translate those two languages that are often not in alignment.
Yeah. Well, that's why I think it's so important. We talk to clients about this all the time of like, go find an independent insurance agent, because like what most people want to do is just shop for price. And because you can shop for everything online, that's what they end up doing. And they have no idea what they have, or if they have a claim or an issue, like you're going to call the insurance company and ask them what you should do. Like that's probably not going to be in your best interest, right?
Yeah. Yeah.
But I think just, I already said this, but I guess just hammering on it, like being your own advocate when it comes to being a good insurance risk. And I'm just going to use like an example for this. I have a customer that we've had for 30 years. He was one of my father's customers. We have an insurance company who is pulling out of the marketplace, and it's because they wrote insurance for not enough money for too long, and you can't do that. And so they sold to another company, and all of these people have these policies that are so underpriced, just like a third of the price of what they should be.
Mm-hmm.
So everyone's more expensive. People are going to market and finding that's just what the rate is now. Well, I have someone who's been with this carrier for years, and I go to write it with another carrier who's complaining about the premium. I then look at this man's house. He has stairs going up the side of his house onto his roof. There's no railing anywhere on his roof. And there's no gate or fence where anyone in the neighborhood can go up. And he said, well, the carrier has never made me had a fence or put a railing. I'm not doing that.
Yeah.
And I said, sir, just think about that. You're an insurance company. Anyone can climb it. Well, no one's ever climbed on my roof.
It only has to happen once.
Like, granted, knock on wood.
Yeah.
Sorry. That happens every time I knock. My dog at my feet goes nuts.
I have the same problem. Our sound technician is very good at editing out dog barks, so don't sweat it.
Indeed.
But
Cheers
just
to
being
him.
your own, making yourself attractive to an insurance company, which sounds like a weird thing, but you can save yourself a lot of time and money and effort by considering how you can manage your own risk without just insurance.
Well, Ben, if we come at it from the angle, and I guess maybe Nick and I do this as outsiders from the insurance industry, that for the most part it's somewhat commoditized, right? And so if one company is offering you coverage for less, we're probably not comparing apples to apples.
You know, one of my favorite phrases is there's 10,000 brands of apples, because people ask me for apples to apples coverage all the time. There's so many kinds of apples.
Okay.
And honestly, I don't care what apple you have right now, because I'm going to tell you what apple you need, and then you can make a decision on your own. But I just had a customer last week who, really good customer I've had for a long time, moved to downtown Detroit. Like literally downtown Detroit. She's 30, like really good insurance risk, but her insurance literally tripled. It went from like $100 to like 5,000. And I knew this for a year before she was moving. She knew this. We'd had this whole discussion. And in the end, she says, I went online to Progressive and they can write it for like $100 a month less. And I said, send me a copy of it. And she did. And it was a great quote. And there were a few tweaks. I'm like, you need more coverage here. You should buy this. You should literally go buy this policy. It's going to save you $200 a year. I do that all the time. She's literally going to come back to me in a year when Progressive's rates go up. Like it all comes around in the end.
Sure.
But not every policy is the same. I do often see, I'm not going to name drop carriers, but like some captive carriers are notorious for, you're going to get a quote and it's going to be way less. And they've removed all medical from your auto. They've in a carrier who they will quote every home with a $10,000 deductible. And when you ask people, I had someone who legitimately said, well, I thought I had $10,000 of coverage. I said, no, that's your deductible. That's what you're paying before this pays anything. But if you only have one product to sell and you need to fit someone into that product, I can go to another carrier and find you a more competitive rate. If you don't have that option, the only thing you can do is limit coverage. And that's how you save money, is by removing coverage. And that's why I have a job, is because most people can't read insurance documents. That's why you have a job, is because people can't manage their finances, or
Right.
it is
Right.
advantageous that they do it on their own.
Right.
And so having that knowledge is helpful to help people not be their own worst enemy.
Yeah. Yep.
Good point.
So we talked a little bit about coverage and some of the, some of the different things that affect pricing. Are there some things that you like? What are some of the things that you see, Ben, that people either should have but don't, or like what are some of the levers that you see people come in with where you're like, no wonder why this policy is so cheap, because you don't have medical or whatever? Like what are some of the, like, maybe the top three things that people should look for if they're going online and getting a quote?
Yeah, I guess we can go auto and home here. We were starting at home, so I guess I'll just stick there. My brain just went blank in the middle of my sentence.
Don't worry, it happens.
Okay. Things that people miss on the home: water backup. Water backup is the most common claim. It has been the most common claim forever. And people think water backup's just covered. You have to buy coverage for it. And when I started selling insurance, everyone bought $5,000 of water backup. You're not settling a water backup claim for $5,000 nowadays. So I see that all the time. If you don't have water backup on your home, just literally go buy it. Service line coverage, we see way more claims about that nowadays, which is interesting that I tell you that your home insurance policy is not a maintenance policy, because service line coverage is a maintenance coverage. Essentially, that's what it is. But that's if you have tree roots growing through your underground pipes.
Okay.
That's actually, you can buy coverage on your home policy, and it's like $30 a year. And I probably have 10 to 15 claims a year from service line. On the auto side, people love to slash medical. And so, I think I've actually been on this podcast before talking about
A few years ago. Yeah.
That was 2020 when we did no fault reform. But as I'm sure most people know, we have a no fault system in Michigan, and everyone has the opportunity to purchase unlimited medical coverage. And so after 2020, people now have the option. You can keep unlimited, or you can select 500,000, 250,000, or you can medically opt out. That's a really oversimplified version of how you navigate medical on auto policies. But people will slash their medical coverage. We're still paying on a $13 million medical claim that happened in the 90s. And I use that as an example all the time, because if this person bought a limit of $500,000 to save $100 every 6 months, I've been in their best interest.
Right.
So yes, no one likes paying for insurance, but we do have a very rich benefits system. And that is a very easy way, when people are quoting your insurance, to slash a lot of premium. And so there are a few things that I very quickly look at when I look at proposals from other carriers. Like, did they jack your deductible up to $10,000? Did they put a wind hail deductible on there? Like wind hail, for example, that's commonplace in every other state, or most other states have been doing wind hail deductibles for years. And so I have to educate my customers on what even is a wind hail deductible. People have never heard of them before. It's not like it's not a complicated concept, but if it's never been a concept that's regular in the marketplace in Michigan, people are just foreign to the concept. And so I find myself often educating and understanding people on what's even in front of them. Like, they don't understand the proposal that they've been given. And that's why I am always attempting to put someone in a post-claim scenario. Because if you have a claim, you don't care how much you paid for your insurance. Like, I don't care that I paid $1,700 for my insurance instead of $1,400 when my house burns to the ground and they build me a new house. I'm glad that I have a carrier that protects me and takes care of me.
Right.
I have carriers that some are easier to deal with than others, and some, their rates may be lower, but I know that there's certain things that they're sticklers on. And if I know that that's going to be a problem for you, I'm going to let you know that up front. this rate is going to be less. This carrier, for example, that is pulling out of the marketplace on the home insurance side, I told people for years, this rate is not enough. It will double or triple at some point when they go out of business. I don't know when that's going to be, but it's going to be at some point. And so just letting people know like what the expectations are. If you don't set expectations for people, they do not know what to expect. And especially in this marketplace, if you're a salesperson and you have to sell on value and you've only ever sold on price, this is a marketplace for you. I mean, I've been selling on value the entire time that I've helped people with their insurance because that's what it's there for.
Yeah, that's a good point.
It costs hundreds of dollars a month for most people on their insurance. It's a large expense. And so I understand why people want to cut that expense. But also that's the point of insurance.
Yeah.
Right.
So I'm curious. I know we talked a little bit about like the claims, turning a claim in versus not turning a claim in. Do you have like a sense of like at what point do you pay for it yourself? At what point do you turn in a claim? Is there like a dollar amount? Is there a rule of thumb? Or is it just really best to call your agent and ask them what they think?
I used to teach a new claim rep school at one of our carriers with one of the carrier reps, and they said, when someone asks a claim rep, how is this going to affect my rates? Call your agent. And I guess I'm going to say that too, just to irritate all the other agents who are now going to get calls about, should I turn in this claim for $900? But honestly, every carrier is going to rate on claims differently. And so like some carriers, like you have 2 home claims, you're going to get canceled. It does not matter the value of them. We don't take people with 2 home claims in a 5-year period. And so knowing like what the rules are with different rules is how you can make yourself not like you don't want to screw yourself by turning in things or doing things that are not advantageous to you. And so I know that certain carriers are going to be more receptive to certain things. Some carriers are like, you can try and get away with that, but they're denying your claim in a second. Others are like, oh, well, they have leeway on that. That's I guess the advantage of working with carriers for a long time is you understand who's good at what and who's a better fit for people. Like this person, for example, who moved to Detroit. The best fit for her right now is a Progressive direct policy. It literally is. And like she shouldn't have slashed certain coverages, but I told her to add them back and she did, and they were still way less. And so at the end of the day, like I'm not always going to be the best fit for everyone. And I'm not going to try and always be the best fit for everyone. I'm going to represent the carriers that I have that I think have the best products. But if someone is a better fit for you, then that's who you should deal with, who you're comfortable with. Because you buy insurance to protect your largest assets. So you have to be very comfortable with what that is. And while we talk about insurance being a commodity, I always find this to be an interesting discussion. Because like, yes, insurance is a commodity, but also like not every company's policies are the same. And there's certain, for example, I have an employee who used to work at a body shop, and she's like, she could list 3 carriers that if she found out your insurance was with them, they were like, are you kidding me? We have to deal with this carrier again.
Yeah.
We probably, all 3 of us could list those 3 carriers, and you could not even being in this industry. But there are some people who they don't care about that. They literally don't care. I want it to be the least expensive as possible. And you know what? I'm not going to fault someone for that. I can't make your decision for you. All I can do is tell you what your options are, educate you, and then hope that you're going to pick the decision that's in your best interest. But trust me, I've typed notes in my system if you deny coverage. So,
well, yeah, as you said a few minutes ago, it's about value, and value is very subjective.
Yep,
absolutely. And we deal with that in a lot of aspects of financial planning.
Yeah,
absolutely. Well, and I think when you define your values, we've very intentionally in the last year gotten very specific about what our values are. And so like we literally weave them into every single thing that we do internally, externally. And our new vision being there matters most, which I love. I absolutely love our new vision. It's so simple, but it's so isn't that what we do? But being there matters most. And when your house burns to the ground, you get in a car accident, like, you just literally need someone to be there. And whether I can solve your problem, you just need someone to be there. But I need to be there for my staff. They need to be there to show up for our customers and all of our internal stakeholders. But being there matters most is what's important to our customers, and that's what builds community. And so that's
I like it
to help people with their own risk management journey.
Yeah. So, Ben, knowing that rates are going up, like, what kind of an increase in your policy should prompt you to start looking around, I guess?
Like what's normal at this point? Do we just accept it?
I guess I'll just go back to saying, like, honestly, every insurance company is different. I have some carriers that, I have one carrier that they got to do when I told you so, because the last 2 years they've been coming in and I've been saying, your home rates are high. They're too high. And now they're less than everyone else. And I'm writing 80% of my new business with that carrier. And so what goes around comes around. Insurance companies are, they go up and down. But I have some companies that are really stable and some companies that are, I'm going to move you to them and they're going to be less expensive, but I'm going to have to move you in a year. And some people want to do that every year. Other people don't. Some people, I'll pay 10% more to know that I can be with this company for 30 years and just not really have to worry about it. Some people don't care about that. So I guess there isn't really like a one size fits all. But I think in general, the message is like, be a good insurance risk. And that sounds really simple to say, but like, I think often, even in this person who has people climbing on their roof, like, imagine you're an insurance company. Would you want to insure that? Like, think about what makes you a good insurance risk, and then make yourself a good insurance risk when you try and find insurance. And I think people can often underestimate the ability that they can have to dictate their home insurance premiums. Like, no, you cannot set your premium, nor can I set it, but there's a lot of things you can do to help yourself.
Right.
I have some people, they're like, I will never turn a claim in under $5,000. Well, then why are we even entertaining a $2,500 deductible?
Right.
You're never going to turn that in. And that sounds so simple, but like, I have that discussion with people all the time. Like, oh, you just saved $400 upping your deductible to something that you were never going to do. And so it's always more advantageous to have a conversation about what someone's risk tolerance is than to assume that it's going to be a one size fits all. And I think that's where I go away from saying, yes, insurance is a commodity, but how it affects you and how you interact with it is very individualized. Your tolerance for risk may be significantly more than mine. And we still both need the commodity, but we value it differently. And so how we interact with that product is very different based on what our perceived value of it is. And, I have people who, they're going to turn in little claims for the rest of their life, and it doesn't matter what I do. There's nothing I can do about that. But, it is what it is. At the end of the day, we are an education company, and I am going to educate you on the risk you have and how you can protect yourself. It is your decision to empower yourself to make the decision that you want and how to protect yourself. But talking to someone who knows what they're talking about is a good first step.
Yeah, absolutely. Love that. Well, that's all great information. I mean, I think we just, all too often we assume because we pay for it, we should be able to use it. And yes, you can, but it's not always in your best interest, right? So,
right.
I think it's a good conversation to have and to get out there of like thinking through the ramifications of what you decide to do or don't do. So, it's super helpful.
Just on that point, thinking long term, and I'm just I'm going to relate this to you guys, perhaps. Do you have customers who call you and say, oh my gosh, did you see the stock market yesterday? I'm making out of this. And you're like, that changes on a daily basis.
Yeah.
Right.
That's all the time. And so, like, part of your job is putting people in a long-term view. Like, yeah, you want me to move you away from, X company to Z company to save $30. I can do that, but like you don't want to do that.
Yeah.
And when you explain to someone why they don't want to do that, they understand it. But they have to understand what you're saying to them.
Right. Yeah. Yep.
Well, I think in that sense too, right now, I've seen a whole bunch of political ads about corporate gouging with inflation and that sort of thing. And I, I look at it with insurance as being, a pretty heavily regulated industry. So, and reminding people that insurance companies are not nonprofits at the end of the day.
I sell for 20 different insurance companies, and one of them made money last year.
Yeah. Yeah.
And so, like, I know that like that doesn't land well with people.
No.
Well, all the insurance companies lost money, and they're like, I don't care.
Right.
It's an insurance company. But if you legitimately think about, like, I could go down this rabbit hole for days,
Mm-hmm.
but on like a very high level, here's just this story always sticks with me because it's big numbers and it makes sense to people. So one of the carriers I sell for, they're in like 2 or 3 different states around here, not a national carrier. Insurance companies buy insurance. It's called reinsurance.
Mm-hmm.
And so if they have a catastrophic loss and they're paying, over millions of dollars, then their insurance comes in and pays for that. Well, this insurance company they're not huge, but it's not a small insurance company. And their reinsurance attachment point was $40 million. This was 2 years ago.
Mm-hmm.
Well, they had significantly more catastrophic losses in that year. The weather had nothing to do with them. Well, their attachment point, the only attachment point they could find in the market moving forward was 80 million. So the next year, they're not getting reimbursed on any catastrophic claim until it's 80 million. Well, that next year, they had 4 losses between 40 and 80 million.
Oh my. Yeah.
So those are all claims that they got reimbursed like tens of millions of dollars for that they're not.
Right.
There's literally nothing you can do in that scenario besides raise your rates.
Right.
Or you're going to go out of business. And so the marketplace is just, and that even gets more into like a commercial insurance thing. You want high limits, obscure coverages. Like, you're not getting the limits that you could get last year. You're just not.
The Wall Street Journal just ran a piece last week on the repricing going on in the reinsurance market and how that's driving a lot of the change behind rates. And I appreciate that concrete example because it's a pretty esoteric topic otherwise for most people.
Well, I think
people
it's
don't
funny
think about that insurance companies have to buy insurance too. But
Right.
Well, I think it's interesting that, on a whole, we probably all don't really care if our insurance company makes money, but we probably should, because if they're not making money and they're not around when you need them,
Yes.
that's a big problem.
Well, we've had that conversation with clients in the context of long-term care insurance because they'll get those rate increase notices, and that usually boils down to, if you want this carrier to be here 25 years from now when you're in a nursing home and have a claim, you're going to have to pay more for it. And nobody likes the increases, but that's the cost of doing business.
Yeah. Yep. Very true. Well, Ben, this has been very informative. We appreciate you joining us today, and I'm sure we'll have you back to talk more insurance. Sounds like we could go on and on several different topics. But we appreciate you and all the work that you do out there. And so, what is the best way for our listeners to get a hold of you if they have a question? I assume that you will allow them to reach out to you.
Absolutely. You can always find us on the internet, rathbunagency.com. On all the socials, Facebook, Twitter, LinkedIn, TikTok. Hired a 19-year-old who runs our TikTok. So
nice.
Good choice.
Not every insurance agency has a TikTok. So
that's right.
But like I said, we're an education company, so I churn a ton of content out, both me and my staff. And so we have 2-3 blog posts, a week that go out on why is my home insurance more? What can I do to help myself? And there's a ton of resources and information on our website. oftentimes people go there first before they even come to talk to us. But just honestly ask questions, be informed. People spend a lot of money on insurance. If you don't like your insurance agent, like so many people sell insurance, find someone
Yeah.
you like.
Yeah.
It doesn't even have to be me. There's a lot of insurance agents in this town. You need to have one that you're comfortable with, that you can have a discussion with about your risk tolerance, and is actually having a conversation with you and not just plugging you into a churning machine. People ask me all the time, like, why do you ask me so many questions? I need to know how to protect you. If someone is not asking you questions, they don't know how to protect you because they don't know what your exposures are. And so I'm always, upfront with people. I might be a little more annoying than the last person who gave you a quote, but at the end of the day, you're going to know what you bought. And that's the most important thing, because
that's huge.
Being there matters most.
Yes, love it.
Good stuff.
Very cool. Dave, as always, a pleasure. Ben, until next time.
Thanks, Nick.
You.
This is a Zedia Media production.